Good day, YouTube. This is Jay Money with Falling Forward Financial. Just kind of an interesting article here on some tech stocks to purchase. These are some tech ones to purchase in June. And as you can see, this was just released. So some of these I have, and as well as some other tech plays. So Oracle, Texas Instruments, and Broadcom. I'm sure you've all heard of all these. Maybe you already have some of these, but still a safe haven stocks in this wobbly sector. As you can know, it's just a yo-yo. Everything's been up and down, and so maybe this three will help even out your portfolio. So many high growth tech stocks have been routed this year as rising interest rates have driven investors toward more conservative sectors. So you got to find new ways and be creative on what to invest in, and just find some ways to be conservative in this market. So maybe these three will help you out. So Oracle, ORCL, Texas Instruments, TXN, and Broadcom, AVGO, and explain why they're still worth buying here in the So the first is Oracle. A few years ago, Oracle resembled IBM. I have some IBM. I've had it for a couple of years. It's got a really nice dividend. I just bought some a while back to try to even out my cost basis, as I'm still in the red. I bought mine back in 2017, and it just hasn't appreciated. It's got a nice dividend, but that's about all I've gotten out of it. But an aging enterprise software company that was trying to offset the sluggish sales of its legacy on-site products by expanding high-growth cloud services. Oracle successfully made the transition, while IBM was forced to spin off to a large portion of its legacy businesses to streamline its operation. As you can see here, this probably was on Friday, currently at $67.72. You can see kind of the climb that it had there, and kind of the drop off that it's had. So would have been a nice dip by there, and could have sold it there, but I haven't been watching this one. Market cap of $181 billion. Days range 67.39 to 69.37. So a little bit of a play there. You can see the appreciation, a little bit over a $43 appreciation. Average volume of 8.6 million. After flatlining a fiscal 2019 and 2020, Oracle's revenue rose 4% in fiscal 2021, grew another 5% in fiscal 2022, which ended this May. Its adjusted earnings, or EPS, buoyed consistent buybacks, also increased 21% in the fiscal 2021, 5% in 22. Growth accelerated because the robust growth of its OC cloud infrastructure platform, Fusion Enterprise Resource Planning, or ERP services, and NetSuite ERP services all offset the slower growth of its older on-premise database software products. Recent acquisition of Cerner will further expand the high-growth ecosystem into the healthcare IT services sector. Oracle expects a cloud service revenue to rise 30%, so that could be a catalyst for a lot of people to look into this one. Again, I don't give tax, legal, or trading advice, just bringing some stocks your way, and you can decide whether they're a buy for you or not. But to rise 30% on an organic basis this year, accelerating from its 22% growth in fiscal 2022, analysts expect the full year revenue, EPS to grow 18% and 63% respectively. Those growth rates should cool off the single digits after it laps its acquisition of Cerner, but Oracle stock still looks cheap at 18 times this year's earnings. Next is Texas Instruments. Sells analog and embedded chips for automotive, industrial, communications, and consumer electronics markets. Anything in chips I perk up. It's like you're not paying attention and then somebody says a keyword and then you start listening, so anything in regards to chips makes me look into it. Its chips aren't expensive or powerful, but they support crucial features like power management services, data transfer tools, and wireless communications. Another one that I pay close attention to, because that's the wave of the future, is wireless communication. So TXN, or Texas Instruments, was down a little bit on Friday as well at $150.20. You can see, looks like it was just right at 175 just about a month ago, and it's just kind of slid down ever since. Market cap of $139 billion. Days range from 149.10 to 153.21. So you get a little $4 play in there if you were trading this one. 52-week range of 149.10 to 202.26. So about a $52 appreciation over the year. It might have been more in regards to this slope off, but I would have to see the exact figures, but they generate most of its revenue from auto and industrial sectors. Over the next few years, vehicles and factory robots will require more analog and embedded chips as they become more powerful, more autonomous, and more deeply connected to Internet of Things. Another thing that I pay close attention to is IoT, or Internet of Things. So anything in the wave of the future. So TI manufactures most of its own chips at its first-party foundries, which prevents it from getting stuck in traffic jams and third-party contact chip makers. Its ongoing transition from 200 to 300 wafers should also reduce the long-term production costs by about 40% to constantly boost its gross margins. TI well-diversified business generates plenty of cash, and it usually returns free cash flow to its investors through buybacks and dividends. Between 2004 and 21, grew by 12% annually, reduced its outstanding shares by 46%, raised its dividend every year. So a bunch of key things to watch for in a stock you want to appreciate, as well as get a little bit of dividend income if that's what you're looking out of it. It currently pays a forward dividend yield of nearly 3%, trades at 18 times forward earnings. Analysts expect revenue of EPS to rise 5% and 8% respectively this year, so it should remain a good defensive play. Even concerns about slower PC sales rattle other chip makers. Last on the list is Broadcom, is another diversified chip maker that produces a wide range of chips for data center, networking, software, storage, and industrial markets. But over the past few years, it evolved into an infrastructure software giant by acquiring CA Technologies and Symantec's enterprise security business. Also recently agreed to buy VMware for $61 billion to expand that growing segment into hybrid cloud market. So another thing to watch is stocks related, companies related to the cloud. So software, storage, networking, all these are things that I like to watch. Anything for the future. So, and AVGO, or Broadcom, currently at $498.65. Another thing I'd like to point out, if you don't have, we'll just call it $500 to buy this one, you can buy slices on Schwab, I think is what it's called. M1 Finance, you can get them on Robinhood. So if you want a piece of this action and don't have $500, you can buy slices or shares on a couple different platforms. So market cap on this one, $201 billion. Days range 487.87 to $500.36. So about a $13 swing there. 52-week range of 455.71 to 677.76. So about $122 appreciation in there. Average volume at 2.7. Broadcom's revenue has risen by double digits over the past 7 quarters and most of the growth was driven by robust demand for chips. Again, another chip play across the cloud, data center, and wireless markets. So a couple good things. We got chips, we got cloud, we got data center, we got wireless. So nothing but good future growth for this one. But again, I don't give tax, legal, or trading advice, but it also relied on Apple, which there's some companies out there that do rely on Apple for about 20% of its revenue last year. So robust sales of iPhones, iPads, and Macs, which all use Broadcom's wireless chips, generated additional tailwinds for the semiconductor business this year. Analysts expect Broadcom revenue and EPS to rise 20% and 68% respectively this year before factoring in its planned takeover of VMware. So maybe now would be a time to get into this one before factoring in the takeover. So just throwing that out there, but you'll have to make your own decision. If that acquisition closes, Broadcom will generate about half of its revenue from infrastructure software compared to 26% in fiscal 2021, and the shift could reduce its dependence on Apple and the cyclical semiconductor market. Broadcom stock trades at 20 times forward earnings and pays a hefty forward dividend of 3.3, so not too bad. Company and its predecessor AVGO, or AVGO, however you want to pronounce it, from wherever you're from, has consistently raised its payout annually for more than a decade. So another good thing I'd like to hear on that one. But that is the three: AVGO or Broadcom. Number 2 was TXN or Texas Instruments, and the first was Oracle or ORCL. So if you have one or all these, or want to list in the comments which is your favorite, feel free. Or if there's any other chip makers or any other high-tech stocks out there you feel is better to buy in June, you can list that in the comments as well. But that's the three that I have for you here today. So going to be working on some videos today, so got the day off, but I'm going to put some work in here on YouTube, so I'll be watching for some more videos coming out. But that is all I have for you for today. So if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is Jay Money, following Forward Financial. Happy trading, happy investing, stay green. Cheers.